From all indications, the largest cryptocurrency by market cap, Bitcoin, has what is popularly called a grass to grace story, even though it is back to the grass right now. It is sometimes easy to forget that Bitcoin is just a teenager. Launched in 2009 by the enigmatic Satoshi Nakamoto. Since then, Bitcoin has seen a meteoric rise, increasing from fractions of a penny to an all-time high. The bad news is that Bitcoin is currently not any step closer to its all-time high. So how do we navigate this phase? The growth in Bitcoin adoption in the early years started to slow, and if you look at Bitcoin's pricing data on Google Finance, it only goes back to November 2015. Those early years were characterized by little infrastructure, with only a few buying and selling Bitcoin. According to an expert, there was no action to speak of and no news cycle. Bitcoin was a fringe phenomenon confined to a subculture of software engineering and not a financial phenomenon. Perhaps the first real-world transaction took place in May of 2010 on a Bitcoin forum, and posting to the bitcointalk.org forum, a Florida native inquired whether anyone would order him 2 pizzas for 10,000 Bitcoins. After purchasing 2 pizzas from Papa John's was worth approximately $40.75. The price of each Bitcoin came up to around 0.41 cents. Those pizzas were the most expensive ever ordered. The Florida native did the impractical transaction for the sake of it, telling The Sun, "I wanted to do the pizza thing because to me, it was free pizza. I mean, I coded this thing and mined Bitcoin, and it felt like I was winning the internet that day." Bitcoin wasn't even worth $1 until February 2021, but that was when the fireworks started. The Bitcoin price reached a record high, breaking through $68,000, and analysts predicted that the world's best-known cryptocurrency will continue to rise further. Bitcoin has always been volatile, but remains the world's largest digital currency, with a market cap of more than $1.1 trillion. A few years ago, a single Bitcoin was just worth about $700. Investors were buying it because they were worried about rising inflation, preferably as an alternative to gold, a traditional inflation hedge, as bond yields were also failing. And then, when things were looking so spicy, various predictions came pouring in. The US investment bank JP Morgan made a bold prediction, forecasting that Bitcoin could rally as high as $146,000 in the long run as it competed with gold as an alternative currency. Also, the US tech entrepreneur Jack Dorsey, the chief executive and co-founder of the payment service Square, said he was committed to making Bitcoin the native currency of the internet, and his company had no plans to expand its offerings to other cryptocurrencies. He told analysts on an earnings call that the firm was working on many initiatives, such as hardware wallets to store Bitcoin, and functions to allow consumers to mine for the cryptocurrency. However, the Bank of England Deputy Governor Sir John Conliffe said that digital currencies such as Bitcoin could trigger a financial meltdown unless governments step forward with tougher regulations. So, for Bitcoin, it has been a turbulent journey to the top. Plus, the performance of the general crypto market depends on the Bitcoin trajectory in terms of price and value. The Bitcoin's price first broke its major psychological mark of $1 way back in late of April 2011, and started its first ever rally to hit $32 on June 8th of 2011. But the joy didn't last long, as Bitcoin plummeted in value to a bottom of just 1 cent for a few days. Following the story closely, the sharp sell-off was largely attributed to security issues at the now defunct Mt. Gox, a Japanese crypto exchange that traded the majority of Bitcoin at the time. The exchange saw 850,000 Bitcoin stolen due to a security breach on its platform, stirring major concerns about the security of Bitcoin stored on exchanges. With Bitcoin losing about 99% of its value in a few days, Bitcoin's June 2011 flash crash became a major part of Bitcoin's history. The event opened a long period before Bitcoin price recovered to previous highs of $32 and climbed to new highs only in February of 2023. During this period, these highs were quite sustained. Long story short, Bitcoin climbed to an all-time high of $69,000, but failed to break the $70,000 mark and started dropping in late of 2021. The cryptocurrency had slipped into a bear market since November last year, recording one of its biggest historical crashes in 2022. In June of 2022, the cryptocurrency plunged below $20,000 for the first time since 2020, fueling extreme fear on the market. The ongoing bear market is largely attributed to the crisis of algorithmic stablecoins, namely the Terra USD stablecoin, which lost its dollar peg in May of 2022. The depegging of the USTC triggered a massive panic over the broader crypto market, as stablecoins had managed to become the third largest stablecoin in existence before collapsing. Generally, the collapse of Terra caused a domino effect on the rest of the crypto market due to massive liquidations and uncertainty that fueled a crisis in cryptocurrency lending. Several global lenders, like Celsius, had to suspend withdrawals due to their inability to maintain liquidity amid brutal market conditions. Why are we bringing up Bitcoin though? Well, discussions revolving around Bitcoin were addressed at the Baltic Honey Badger Conference, and there were significant updates. The twists and turns of Bitcoin's journey were highlighted. Nevertheless, it remains a great investment decision. But are we going to sweep the discomforts under the carpet? Liquidity across Bitcoin's trading pairs slumped and failed to recover since the collapse of FTX in November. An apparent exit or reduction in trading by Jane Street and Jump Crypto, two influential cryptocurrency market makers, has the potential to disrupt the fragile flow of liquidity across the industry, according to an analyst in CoinDesk. Now, Jane Street and Jump are powering back crypto trading in the US amid the regulatory clampdown that spawned out FTX's collapse in November. According to reports, Jump's crypto division will continue to expand globally while Jane Street will scale back on its growth plans. An expert wrote, "The news is not necessarily surprising given the recent developments. What's concerning is that the liquidity has still not recovered from the Alameda collapse, and a slowdown with two of the biggest surviving market makers could weigh on liquidity even further. It's a bit surprising how slow the industry has been to fill Alameda's shoes. These are trying times, but there is only one way out of it: stick with Bitcoin." Moving forward, after a strong start to the year 2023, the crypto market is now witnessing a slight downside due to global macroeconomic situations and inflation data. The world crypto market capitalization is trading at $1.04 trillion, a bit under pressure due to the impact on the trading volumes. However, Bitcoin and Ethereum showed incredible stability at the start of the year and have been trading in green with a marginal rise. Above all, the crypto market has shifted from greed to neutral, and now it is fear. The world's largest cryptocurrency, Bitcoin was hovering around the much restricted levels of $27,000 after touching the $31,000 mark in July. Ethereum has also shown signs of recovery, corrected a bit, and then was above the $1,850 level. This marked its highest peak since August of 2022 after touching the $2,100 level in mid-April of 2023. This rally was seen immediately after the successful launch of the Ethereum hard fork, Shapella, which was targeted at transforming the landscape of Ethereum and its applications. And yes, the crypto market is still very much volatile. It usually gets volatile when it comes from announcements from the US Feds, as crypto experts closely keep an eye on such major developments, which can directly impact market liquidity factors, as increasing interest rates can sting equities, commodities, and also cryptocurrencies. Recently, the market witnessed massive support due to several optimistic factors, such as inflation tackling methods and the weakening dollar index in the US, which boosted the overall sentiments. Observing from the broader level, the entire cryptocurrency market, including Bitcoin and Ethereum, is showing very little signs of recovery. Moreover, ceiling and interest rate hikes in the US and in the inflation data have put crypto traders in a daunting position. But it is still interesting to note that the crypto market is leading the path to resistance before the high jump. Before you get caught up in the euphoria that upcoming games will take off, remember that the most important thing before investing in a cryptocurrency is knowing that the crypto market is highly volatile, and investing will not always turn out as planned. The market is still recovering, and investing right now might not necessarily be a good idea. Even the crypto experts are confused with the dynamics of the current crypto market, so it wouldn't be a wise choice to invest all your life savings into cryptocurrency, and always do your research and analysis before investing. Whether you decide to kill two birds with one stone by investing in Bitcoin and Cardano long term is still key. We need a lot of patience down the road. But that's going to do it for today's video. Make sure you hit the subscribe notification buttons, and we'll see you in the next video.